Good day, everyone, and welcome to another JK's Deal Reveal. Today is going to be an extra special one for you because we are going to be bringing you a real live opportunity to invest in something we have never shown you before. So we are super excited. We even have a guest speaker on today with us, Jim, and he is going to show you. He's actually the one who's going to reveal the deal of the evening. So let's get started. Let's get dancing now or tomorrow.
Don't wait for tomorrow. Live for today. Keep chasing the sunshine and go out and play.
All right, fantastic. Now that we got our energy up, let's get started. Jim truly is, and I've given you access, Jim, to share your video, your screen. You should be able to get all accesses. But today's giveaway is truly this gentleman right here, Jim Conaway. And, I'm going to say at the beginning, Jim's an amazing individual, extremely savvy, creatively minded, real estate investor, tax professional, I'll say that ultimately. And he's got his fingers in a whole bunch of pots at the same time. So if you have the pleasure to meet Jim, talk with Jim a little bit, your mind will be blown and your investing will be brought to the next level, guaranteed. We personally hired Jim to overview our entire financial situation, asset management situation. And it's been a couple of months now, and there's still more to come. And it's so excited. And Jim was like, hey, by the way, you like real estate. I like real estate. Let's do some real estate. And so from the fil en aiguille, like we say in French, here we are today. And so, Jim, thank you for taking the time today. And I will just zoom by here, let anybody know that if whatever you hear today is resonating with you, it's as simple as sending us an email. You know how this works, right? Every week we bring a deal to you. And if you're interested or if you have a deal you'd like me to review, it's always the same thing, guys and gals. info@nowfortomorrow.club. Get in line, get in the queue, because we're doing this for you. So we're getting excited, Jim. You're already excited, but we're all getting excited because we're going to ultimately, we're not going to spend 10 hours analyzing this, right? In probably 15, 20 minutes, I don't know exactly how much time, but in a very brief amount of time, we're going to identify an opportunity, and we're going to see how, there's better cash flow than in Canada. There is cash flow, first of all, right? In Canada, it's difficult to cash flow, especially with a new construction, right? That's what we're going to show here today. A new construction investing with cash flow from day one and an exit strategy to create multiples on your investing. So very excited. I don't want to steal too much of the punch away, but the idea of these deal reveals is to show you, right, that there is a place and a time where the numbers just make sense. And that's what we want to show you. So today's deal reveal, without further ado, will be presented by Jim. So welcome to Passive Town, USA. Jim, take it away.
Well, thank you. Okay. And just so that you know, Kyle, one of my little skills in life is that I'm a former radio show host. So kudos to your ability to bring up the energy. Yay. Now,
when I grow up, I want to be like you, Jim.
Okay. Thank you. Ladies and gentlemen, I just want to let you know that I'm super excited to share this opportunity with you. And what I'm going to do is I'm going to walk you through a couple of thought processes as we go through this. The first thing I'm going to do is I'm going to show you the standard deal. Now, the standard deal is pretty darn good. And many of you may say, give me the standard. That's okay. Let's take a look. Okay, so what we're looking at right now is we're looking at brand new construction. You can see it's a pretty small, pretty average, a great little starter home, and that's actually quite deliberate on our part. It's a 3-bedroom, 2-bath arrangement. The 3-bedroom, 2-bath, we have found to be the highest quality rental type property, because what you want is you want mom, dad, and the kids. Can I get an amen there, Kyle? Yeah. Okay. And of course, 2 bathrooms. Now you'll notice from the floor plan over here, the bathroom for mom and dad's a little bit bigger, because guess what? Mom wants her own sink. Right on. We're good with that. Open concept. Lovely. And it's got some decent curb appeal. But you know what, Kyle? If your people are anything like mine, it's about the deal. Show me the numbers. So here we go. $165,000 is the purchase price. By the way, that is subject to change depending on supplies and lot upgrades and things like that that are available. So let's take a look at what the standard deal might look like. As you can see, the rent is $1,350 per month. Yay. And we have insurance, property management, tax. We have a maintenance factor and a vacancy factor. So far, standard. Am I right? So far, so good, right? And it's a pretty decent cap rate for new construction. Are you kidding me? 6%? That's pretty darn good. So here's your down payment. By the way, this is verified, available for Canadian nationals. $49,500 down payment, estimated closing costs $3,300. That's $52,000 in. Let's see what happens on the way out. Okay, here we have a breakdown of all the expenses, and there's your cash flow. $139 a month, not bad. That's a 3% rate of return for your $52,000 invested. Well, let's see what happens. Are we going to keep the rent static, or are we going to increase the rent? Well, here we've kept the rent static just to see what would happen. Over a 10-year period of time, 259% return. Wow. But wait. See, this is my radio show host. I get to legitimately say, but wait, there's more. Folks, you didn't pay any tax on the rent because of depreciation. You didn't pay any tax on the appreciation until you sell it. You didn't pay any tax on the pay down of the mortgage. That 259% is net after tax. Now, in sign language, that's applause. Okay? So there we go. Okay? Now, this is standard real estate stuff. These are tenants. These are renters. Right? As you can tell from the property layout and the location, we shouldn't have any trouble renting these properties. It's going to be pretty popular. The problem with rentals, well, let's talk about that for a minute. What is the property? What are the problems associated with a standard rental approach? It's the tenants. Okay. Then it's the property management. Can I get an amen from real estate investors? Okay. If it wasn't for toilets, tenants, taxes, and management, real estate would be perfect.
Don't forget the contractors too, right?
Don't forget those contractors, by golly gosh. Okay. So the point of the matter is we actually have figured out a way to really, really impact that for the positive. So what I'm going to do is first, I'm going to continue showing the property. Here we go. I like this. There it is. Yes. It took Max a half an hour to train this monkey how to click on that button. Okay. But what I want you to get a sense of is the quality of this property. Now, those of you who are married and a little bit more seasoned in life would look at this and go, hey, that's a great first-time house. Because that's exactly the kind of target market that we want to address. Okay. And I can tell you right now, the thing I like about this property, again, 2 sinks, mom and dad. Nice little detail, the industrial glass for the shower, walk-in closets. This is the kind of quality we're talking about. This looks nice, doesn't it? Okay. Of course, now if I continue to try and drive through this thing, I'm going to show you how bad I truly am with a computer. Okay. As you can see, it's a lovely open concept setup. Okay. It is a nice home. So far, so good. So how are we going to make it better? Well, let's come back here and let's take a look at the strategy that Kyle worked with me to develop. We call this the resident model, not tenants, residents. What's the difference? The resident is pot committed into the property. This is part of what Kyle was referring to in that there's a built-in exit strategy. Because the resident is pot committed, we eliminate 85% of all the issues associated with running the real estate. Now that deserves applause. Okay. Now, think about this for just a second. Those of you who are quick will notice something happened to the rent. We have found on average, the rent goes up by well over 20% with this approach. Very specific, the resident approach. Now you'll notice something else. The maintenance and the vacancy factor has gone down dramatically. Even though the residents are pot committed into this particular approach and have an owner mentality, think about that, not a rental mentality, an owner mentality, right? We still can anticipate that there's going to be minor expenses coming along. We can still anticipate that people have things happen in their life and need to move out. So we do have some numbers factored in for that. Let's take a look at what our bottom line is. Our bottom line is $261 a month. What? Wait a minute. The income went up. But folks, do you recall I said keeping people like Kyle and myself involved in your transaction over time? Yes. Look, right here, we're still involved. We still get to play the game with you. And you're making more money with less hassle. There it is. Total return over a 10-year period of time, 264%. And that's a fairly conservative estimate. In fact, a matter we have built in, we have a rule of thumb. This is a good one. This is a freebie. For those of you who own rentals now, you're always trying to figure out how to increase the rents. Here's a good rule of thumb. Take your net rent times 15%, and that equals a pretty good rental increase for next year. So if I got $1,000 gross and I make $500 net, 15% of 500 is, if I can do the math in my head quickly enough, $75 rent increase for next year. That's a nice little rule of thumb. It can play out quite nicely for those of you already running the real estate. Real fast, going to go back over this deal. Come back up here. We've managed to find a methodology to increase the rents. We have built a process to reduce maintenance, to reduce vacancy. And we're eliminating a whole lot of hassle and headaches by having brand new construction with warranties, the whole 9 yards. Yay! Now, in addition to having brand new construction, please understand the residents are going to be responsible for maintenance. Now, because it's brand new and has a warranty, we can anticipate refrigerators dying. We can anticipate air conditioners going kaput, things of that nature. Not a problem. It's covered by warranty. Not your checkbook. Covered by warranty. We have teams of people on the ground to facilitate warranty claims and making the minor repairs that occasionally may crop up, not covered by warranty. Make sense? But take a look at the numbers now on the tail end. You put in, here it goes, you come down here. You're putting in $52,000, right? We get mortgage pay down. Do you see that number right there? That is the pay down of the mortgage. Who's making the mortgage payments? The tenant, our resident, is making the mortgage payment. That's absolutely correct. Then we have equity growth. I love this. Remember, these two are tax deferred and tax free so far, and your rents are covered by depreciation. So you're making $14,000 off of just paying down the mortgage. making the mortgage payments. But wait, you make $28,000 on growth. There's your own money coming back to you, and your overall rent, $44,000. Add that up, that's $139,000. Now, is this guaranteed? No. We have insulated you from risk, but we have not guaranteed these numbers. Please understand, it is real estate. It is subject to all the normal risks associated with real estate. We've just done everything in our power to insulate you from the risk and make sure that your experience is quite good. I'm going to reiterate one other thing. Please know, you will not be getting phone calls from the tenants about the toilets. They will be residents and therefore have an owner responsibility of taking care of the properties. Second, the properties are already pre-sold. Now, that only happens about 30% of the time, but they're pre-sold at a profit. Number three. I'm on number three, right, Kyle? I can't count. Three. Okay, three. Your team will be doing all the tax, mortgage payments, all of that, all the maintenance, dealing with the residents, making sure that everything is legally copacetic with the municipalities in charge, et cetera, dealing with all that hassle factor and producing a simple, easy to read report each and every month. Now, I like this because one of the things that does tell you now, Kyle, you have to understand I'm old fashioned. Okay. You have to know that I am an old fashioned kind of guy. Okay. So
I love you for it, Jim.
Take this for what it's worth. The skill set that I have to develop in this, if I'm the investor, being able to rip open the envelope without hurting the check on the inside of the envelope. Okay. I know it's a significant skill set. If anybody needs, we're offering additional training at the end of this. Okay. All right. So I now am opening myself up for any questions anybody might have about this particular investment.
Beautiful. So for those who are on the live right now, either on Zoom or in Facebook, this is your opportunity. We have a member of the JK team also looking at the Facebook cross stream right now. So this is your time. Chat up in the Q&A if you're on the live Zoom, or if you're on the Facebook. The member of the JK team is going to, there might be a few 30-second delay, but they will bring it over. And while they're typing that up, Jim, maybe say, hey, this is a one-off, right? You've got this one deal, or like, can I buy two? Like,
well, that's a very good question, Kyle, because I've never been one to be a piker. We've built this spreadsheet so that people can buy 10 of them if they wish.
Or 110.
Or 110, because I type with that, okay? So there you go. But at 110, look what happens. Well, oh my goodness, you got an 11% cash flow. Okay.
Yeah, I think there's something with the.
Yeah, there's something happened with my formula.
Yeah.
You're right. I'm not going to mess with it, but here's the point. We sell them in packs of 4 units at a time. If you want one unit, you're more than welcome to purchase 1 unit, but they are sold in packs of 4. When you purchase 4 of them, there will be some credits available to help you pay the closing costs. Yay! Great news. Okay.
So if
now we do have some restrictions, Kyle. I apologize. We can only deliver 4 per week at the moment. Okay. Beautiful. So you have some questions?
Yeah, absolutely. And I just want to and cherish that a little bit. 4 per week. That means like, could we do 100 in a year, 200 in a year, Jim?
Yes, but you will have to buy me lunch.
I love it. I love it. So this is it. This is another element of the power that we're bringing to you here, is that if this is really something you're like, oh my God, I was waiting for this passive opportunity, or, your colleagues, your friends, and other people, this is not a one and done. You don't have to be the first one to like pick up the phone and send the money, but there is a speed element. But it's not just a one and done. You can wait 1 week, talk to your partner, and then ultimately pick up the phone and go forward and enter the wait list, basically, because we do expect there to be a wait list building quickly. But nonetheless, there is more than one unit here, which is another change to our normal deal reveal, right? It's one property, one deal, and that's it. No, this is something that you can next week give us a call about. So yeah, so we have a couple of questions that came in. Trevor Peters, who says, this is a really good question, and this is key here. How does calling the tenant a resident allow you to increase rent? And where is the property?
That is a brilliant question. Mm-hmm. And no, it isn't just simply the name. Right. Okay. There's actually a whole process behind it. The residents commit to the property with an option fee. So in addition to a normal rental contract with a deposit and a rent, first month's deposit, all that kind of thing, they also commit several thousands of dollars, usually $5,000 to $7,000, depending on their situation, as an option fee to buy the property in the future. You see, one of the things that we have discovered is that one of the biggest concerns tenants have is having the property sold out from underneath them. That's a big fear that they have. And so they think of themselves as temporary or migratory. By changing and shifting their thinking, making them an owner ostensibly, which is part of our new process, making them an owner, we change their thinking. It's now their home. If they want to paint their bedroom blue, if they want purple carpeting, God bless America, put in purple carpeting. Okay, by the way, no kidding, I actually had a tenant do that. Barney purple, no kidding. Okay. Now
they took care of that Barney purple carpet, right?
Yes, they did. They love their Barney purple carpet. Like, so when the tenant asked if he could paint the unit, I said, I'll buy the paint.
So key here is the resident is because, and for those who attended the Epic Blueprint, you've learned the strategy before. It's a lease with option to buy. So they are tenants, but they also have an option to buy, and their full intention is to own this property in the near future. 10 years is the projection, but if they can do it earlier, they may do it earlier, which will just increase your ROI, your cash on cash return, earlier. So why not? So the built-in exit is that this property will be sold to the resident, and then ultimately you're out of that property as an investment. But then you've got all this huge ROI to do it all over again because we have more.
Wash, rinse, and repeat.
That's it. I love it. A sub question he had is, where's the property located? Maybe we can answer that one real quick.
Right. Right now, we're filling up Southern Illinois. Our next marketplace is Arkansas.
Beautiful.
So because of the demand on these things, we're going to be we need our investors to be pretty flexible with us. You are not going to be dollar committing until we know where the property is going to be located. You should know that. Our process looks like this. The first thing that we do is we send you the performance. You say, it looks great. You give us a signature. The second thing we do is we send you a reservation form. It's a $350 non-refundable, $350 fee to be underwritten. Once you're underwritten, then we send out the purchase contracts. At purchase contract, that's when the price gets locked in. That's when the property location is absolutely identified. When we're selling 4 of these guys every week, you can imagine we've got a lot of activities going on behind the scenes. So bear with us. Our intent is for you to be stellarly pleased because we want you to buy your next 4. And the next, and the next, and so on.
Love it, love it, love it. Gloria Virtue says, what was the price of the house again? And it was a 30% down payment. Those are her questions.
The price of the house is $165,000. By the way, those are American dollars, not Canadian dollars. And the down payment is 30%. Estimated closing cost is $2,000.
Beautiful. And so we're at a 52,800 as the anticipated money to buy one of these homes. And as more bulk on a 4-pack. I don't know if I'm shooting ourselves in the foot here, but if someone buys 4, is there some flexibility on that price, Jim?
No, there's no flexibility on the price. However, we will recognize the people who are committing to be partners with us in this, and there will be some credits towards closing costs.
Beautiful. And so maybe on a pack of 4, we can be pretty close to 50K per property on an average, and just roll them out like that. A nice round 50K per property. And for those of you who've been following the deal reveal in the blueprint,
Kyle, I think you just gave away several thousands of dollars. I didn't want that speed bump to, be missed. Okay. That was $2,800 times 4. Somebody needs to do the math for me. That's well over $10,000 because Kyle's a nice guy.
Because Kyle said so.
Thanks a lot, Kyle. That wasn't as much as I was planning, but okay.
Right on. All right. I hope everyone caught that. And for those who, I'm just going back to the basics of our deal reveal, cash flow. Cash flow. That's why we're investing in the US, people, for cash flow and strong returns on investment, ROIs. And what's the minimum criteria when you get a property financed? When you buy a property in the US and you have it financed, what's the minimum cash flow? I always say, right? If you're below that, don't buy it. And if you're above that, fantastic. And if you're double that, if you're 2.6 times that, well, might be a great deal. And look how the cash flow is increasing along the way, right? That minimum is $100, right? $100 a month at a minimum, right? But here we're start right around 260, right? This is solid day one cash flow. And there's financing, 70% LTV leverage to get you in on the front end. So this is pretty amazing. So any other questions? I don't know if Dickie Team is pulling any from the Facebook side. I didn't see any come in, but yeah, that's it for now, Jim. I guess, did you have like a second piece you wanted to run on this, or this is it?
Well, I did want to say, for those who are U.S. taxpayers or concerned about U.S. tax, one of the things that we can do is a cost segregation report. Now, of course, Kyle, you're already familiar with cost segregation reports in the U.S. This is brand new construction. We would anticipate the deductions to be better than 25% of the purchase price. What? I'm sorry, that's where you got to do the scratch thing. What? Okay. So imagine somebody comes in and they purchase, I don't know, let's say 10, right? My phone, because I can't do the math in my head fast enough. Okay. So if you were to purchase 10 of these guys, that is 165,000 times 10, 1,600,000. At $1,650,000, you can anticipate $412,000 of tax deductions if you do a cost segregation report, and you can use those. Now, my front business is tax, okay? So yes, we'd be glad to work with you. And that's one thing that's really interesting about this, is a unique opportunity. I'm not just a real estate guy. Kyle brought me onto the team, was very, very specific to say, this is a deal reveal. We're doing real estate focused deal today. And I want you to be part of a team with my people. So all you have to do is raise your hand and say, I am with Kyle and JK. And I get to the front of the line hall pass. I get the special treatment. I'm going to be treated very, very well. And if you have any additional questions, you're more than welcome to ask. Is there anything else?
I love it. I will say a couple more things. So Sukhvinder is saying, thanks very much, Jim. This is very insightful. And you have a great radio voice, by the way. So I will reiterate.
I know.
I will reiterate, and I just put it in the chat as well. If anybody's interested to get in line, get in queue, you just send us an email, info@nowfortomorrow.club, and we will create the liaison between you and Jim and make sure that the red carpet service gets rolled out. I will also say, I just want to go back to that cost segregation just for a little bit, because yes, you have $1.165 million worth of real estate, but you may not have bought it all cash. You may have leveraged in 70% of it, right? And so if you're 50K per property in times 10, you're $500,000 out of pocket to buy these 10 properties. And you get $400,000 of tax deductions on $500,000 money spent. That's 80% of the money you spend is going directly, correlating directly into tax deduction. This is massive returns in your first year. So I had to just make that additional connection here for everybody.
Hey, Kyle, I got to tell you something. A lot of people miss this little factoid. Do you remember I said the real estate and the mortgage pay down was tax-free? That remains the case, whether you do the cost segregation or not. There's enough depreciation left over that the rents are pretty much tax-free.
Mm-hmm.
Wait a minute. The appreciation is tax deferred.
Mm-hmm. Mm-hmm.
What? So think about this for a second. Let's assume for a second there's a little heart floating across the screen. It's so cute. Okay. Let's assume for a second that somebody's in, I don't know, a 30% tax bracket. They save $120,000, like real cash up front. So they're not in for $500,000. They're in for $380,000. What?
We basically just gave 2 properties away.
Yeah. What if I did this? What if I just tell my little computer, oops, I'm in for $38,000. Let's see what that does on the numbers. Wow, spectacular. It adds an extra 50% return.
This is real estate.
I'm sorry, now you understand why I love real estate, okay? Kyle and I, we're joining a 12-step program. The first thing we have to do is admit, my name is Jim Conaway and I'm a real estate investor, okay? This is fantastic stuff. I also want to reiterate one more time, you're working with Kyle and with my network of folks, okay? We will be in this with you. This is not, you're doing it on your own. This is not a DIY program. This is, you come in, you get the professionals. I mean, think about it, folks. Wouldn't you love Kyle to be looking at your real estate every so often and say, hey, yeah, it's working, let's go. Let's, you know, we got to make this change, that change. Think about that. How valuable is it to have that kind of focus on your investments?
And people have been asking, honestly, for years now, like, how do we work with you? How do we work with you? And we didn't have a service product that could satisfy the masses. Like, I can work on 1 and 2, and you know, we have options for that. But ultimately, to roll out to the general community like we're doing right now, it's not something we had the capacity to do before Jim and his team, you know, joined ours, and ultimately have, yeah. So it's just really exciting on both sides of this coin. So we're really, really excited to, you know, to deliver.
Absolutely. And if I can figure out how to use my computer, there we go. All right. Unless there's anything more about the real estate, I'll do a stop share. Yep.
That's perfect. Thank you so much, Jim, for your time today, and for your energy, for the old-fashionedness and cracking jokes, just like you always do. It's really a pleasure. If you have any other questions, info@nowfortomorrow.club. If you want to get on the queue, info@nowfortomorrow.club. And if you say, hey, I want 4, guess what? info@nowfortomorrow.club. So
but what if I want 100 of them?
You'll have to wait 25 weeks.
But you still have to go to the same website.
Oh, gotcha. Yeah, info@nowfortomorrow.club. Sorry, I missed that cue, Jim.
Not a problem. All right, ladies and gentlemen, thank you so much. And Kyle, thank you so much for letting me be part of the deal reveal. I hope this has been fun, entertaining, and interesting.
It has on my side, certainly. So have a great, great evening, everyone. And everyone else, we'll see you next week for another deal reveal. Now for tomorrow. Happy investing.